Welcome back, everyone. So in this session, we are going to work through question 4, which specifically looked at your debtors and creditors. So the first thing we're going to do is go look at what are you required to do before we even read the further information. Okay, so let's see. The first thing we are required to do is prepare the account of grand manufacturers in the general ledger. The creditors ledger. Okay, so the first thing we need to know is we are busy with the creditors ledger, which means on the credit side, we increase the account, and on the debit side, we decrease the account. Okay? They tell you they do not make use of the coding system. You are required to supply the name of the appropriate source document. So you have to tell them what source document would relate to what type of transaction, as well as the folio details. Now, as soon as they tell you that you have to do the source documents and the folio details, you will receive marks for them. And then they tell you document numbers are not required. So you only have to give the document name and the folio numbers. Then for question 4.2, they ask you to look at timber builders owed gross drain 175,000 in the beginning of May. On 6 May, gross drain received the payment from timber builders, so that means this is your debtor. Okay, if we receive a payment, timber is a debtor. Okay, so timber, but the check was returned by the bank, Mark RD, as a result of timber builders not having sufficient funds. Gross drain sold further goods to timber builders on the 16th of May for an amount of 176,000, allowing them a 5% discount. In your opinion, do you believe the transaction was a wise business transaction? Okay, so this relates to whether we believe what happened here in this scenario was a wise business decision based on the information. So we'll come back to that. And then they tell you that they went insolvent. So how much will you have to write off? Okay, so based on that information there, we then have to work out what was the irrecoverable amount. And then they ask you which accounts would be debited and which would be credited in terms of the above. Okay, so from this information, you can see we've got both a debtor and a creditor that we are dealing with. So we need to separate the information. Okay, so let's go through the information. So my suggestion is as soon as they have a debtor as well as a creditor in the question, is to use 2 different pens or mark it differently so that you can identify your debtor from your creditor quite easily. Okay, so let's go through this information. Gross drain trades in building materials and have amongst others the following debtor and creditor. So timber builders is your debtor and grant manufacturers is your creditor. Okay, now I'm going to use the same color because I can actually change the colors here. Let me then just change the appearance so that we work with 2 colors so that you can clearly see what's your debtors and what's your creditors. Okay, we are VAT vendor and all amounts include VAT at 15% and where applicable unless otherwise stated. So we know all amounts are inclusive of VAT unless they specifically state otherwise. Okay, so let's look at the transaction. So on the 1st of May, Timber Builders owes 175,000. So our debtor owes us 175,000, whereas Grant Manufacturers, our creditor, we owe 58,000. Okay, because we have to complete the debtors, the creditor's ledger, we know this is the opening balance. So I'm going to go fill it in on the spreadsheet that I've created. Okay, so on the spreadsheet, I've got gross name, that is our business, creditors ledger, and I've got who the creditor is. The creditor is brand manufacturers, and their number is C21. So from the information, the opening balance, I go fill in on the 1st of May. The balance brought down is 58,000. Now, very important to remember, this debit and credit column should be empty. There should be no information in there if you insert an opening balance. Okay, so this is the first thing that you fill in, and you would have received half a mark for just completing that information. Okay, if we go back, we paid grant manufacturers by check an amount, the amount owing less a settlement discount of 5%. Now, as soon as we see we've paid them by check, less an amount of settlement discount, so that means the payment that would have gone through the cash book payments would have been at 95%. I'm just going to write here. Payment in our cash book payment would be at 95%, and then we would have had a general journal for the discount at 5%. Okay, now remember, we want to show the full transactions in our creditors ledger. So we're first going to account for the physical payments. So how much did we actually pay? So the first thing is, what document will we receive when we make a payment to our creditor? What document do we have if we make a payment to our creditor using a check? What is the document we have? What is the source document I have if I made a payment with check to my creditor? You can type your answer in the chat function, or you can pick up the mic and chat to me. I'm going to repeat my question. What is the source document if you paid your creditor by check? What document will you have in your records? Tatu, creditor's invoice is for when you purchase something, not when you make a payment, but it's a good guess. So if I made a payment, so I gave them a check, what information do I have to show what I paid? Okay, I know a lot of you do EFTs nowadays, so let me help you out here. So you would have a check counterfoil. So that is a little piece of paper that stays behind in the checkbook. Once you tear off the check, that gives the information who you paid and what amount you paid them. Okay, so we know the folio would be our cash book payments because it went through our bank. If we pay a creditor, we will decrease their balance. So we would debit their account, but we said we only paid 95% of the amount. So we take the 58,000 times 90%, gives us an amount of 55,100. Then we adjust the balance to show us that the new balance is 2,900. Okay, but we got discount, so our balance should actually be zero after that. So our next document we would have is our journal voucher. So we would then write a journal, which is in our general journal, to account for the discount we've received, which should equal the amount after what we've paid to give us a new balance of 0 Rand. Okay? So these two amounts should agree. The amount after we've made our payment should agree to the amount of the discount in the following line item to get us to a 0 balance. Okay, so the discount should equal the remaining balance and make our balance 0. So everyone's still okay up to here? Any questions so far? Okay, so then on the 6th, we received the check from Tembu Builders for 70,000 as part of part payment. Now we know Tembu Builders is our debtor. So this is not accounted for in our creditors journal. This is part of question 4.2, where we have to go discuss the fact that we had our opening balance, they made a part payment, and then we sold more goods to them at a discount. So we'll deal with that shortly. So this is our data. Then we go to the 7th. We purchase goods on credit from Grand Manufacturers. Okay, so that's again from our creditor. We've purchased goods for 240,000 less 5% trade discount. Now, as soon as you see trade discount, you need to know that you have to reduce the amount when you record it. Now, the same applies to when we do the statement. We will only show what we actually owe the creditor, and not what the original amount was before the discount. Okay, so this Tatu is where your creditor's invoice comes in. So on the 7th, we've got a credit invoice. It is our creditor's journal. Okay, so we said that will increase our amount, but we had 240,000, but we got a 5% discount. So we actually only paying 95% of that 240,000 when we pay it one day. So that amount is 228,000, and that then increases our balance to 228,000. Then on the 8th, returned timber builders check was marked RD, so this is also relating to the data. I'm just going to say your data, so we'll deal with that separately. Okay, so they paid us with a check, the check bounced, it was returned, there wasn't sufficient funds. Then we sold goods on credit to timber traders for 176,000 less 5% discount. So this is also relating to our data. Okay, so we sold more goods to them. Okay, returned merchandise to Grand Manufacturers. Were 40,000 Rand, as it was not per order. So when we return something, our balance will increase. So we are going to debit it. So when we when we return something, what type of document do you think our creditor would provide to us? If you return goods to your creditors, what type of document do you think we would expect to receive? Okay, so when we return something, we always get a credit note to show the information. Now remember, when we return something, our journal is the CAJ, and we returned it for 40,000, so we're going to debit our creditors account with 40,000, which means our balance now will reduce with 40,000 to 188,000. Then we purchase further merchandise from brand manufacturers for 360,000. Okay, so when you purchase something on credit, it goes for your creditors journal, and we have a credit invoice, and it would increase our creditors. So we're going to credit the account with 360,000, and we add it to the 188,000 to give us a new balance of 548,000. Then we received a debit note from Grand Manufacturers for undercharge of 5,000 Rand on the purchase, so they did not apply the correct amount. So we were undercharged with 5,000 Rand. So we're going to add additional 5,000 Rand. Now, because they tell you it's a debit note, your document is a debit note here, and it will still go to your cash book, your creditors journal, okay? And we will increase it with the 5,000 we were undercharged, and we will increase our balance with that 5,000 as well to get to a new balance of 553,000. Okay, any questions on part A of this question? How to do your creditors ledger? Any questions so far? Okay, let's move on to question 4.2.1. Okay, so answer the following questions using the information provided in the transactions above. So they tell you Timber Builders owed Grosdane 175,000 at the beginning of May. Now that information you would have also seen here that they owed us 175,000. Then we can see that they paid 70,000. That 70,000 was returned, and then we did additional sales to them for 176,000 less 5%. Okay. So they're just summarizing all that information here in the paragraph again for us. So now they're asking, in your opinion, do you believe the transaction dated the 16th of May, so the additional sale that they made at a discount, was a wise business transaction or not? And give your reasons for your decision. So do you think it was a wise business decision for Grosdane to sell to Tembu Tailors at Builders at a discount after their check bounced? What do you guys think? Okay, so Tatu thinks no. Why do you think no, Tatu? The rest of you can also give it your opinions on whether you think it was a wise business decision. You can give me a yes or no at the moment, and then you can type your additional information after that for me. You're also welcome to put on your mic and just explain to me why you feel it is not a good business decision if it's easier for you. Okay, so why do you guys think it was not a good business decision? Okay, so Tatu says because their check bounced, I don't think it was wise for them to offer a discount, which initially they could not afford, I think. Okay. My next question is, when do we normally give someone a discount? When would you generally give someone a discount in your business? So I'm going to repeat my question. When would you normally give someone a discount? Okay, so zero thinks when your stock isn't bought, okay, so old stock, you're trying to get rid of old stock, or when a customer spends a certain amount of money. Okay, so normally if they spend a lot of money, you would also give them a discount. That's absolutely correct. So let's see, you guys are on the right track. So let's quickly see what the suggested answer would be. So no, it was not a wise decision, and the reason for that being is the bank stated this debtor did not have sufficient funds to honor the check dated the 6th of May. So this means the ability to make a payment is therefore questionable. So we don't think they're going to be able to pay us in the future. So Tata, what you said, that is exactly correct. And then a trade discount would normally be awarded to your debtors with a good record of payment and to encourage them to buy more of because of their good payment record. So Celia, when you said we want customers to spend a certain amount of money, yes, that is absolutely correct. We are trying to get our customers to spend more money by giving them a discount, especially if they're good payers, then we would give them a discount. So that is the reason why that was not a very good business decision. Okay, let's look at the next question. Now they're asking us, how much money would Gross Dane have to write off as irrecoverable? How would you guys work this out? How would we work out how much money do we have to write off? You can type in your steps in the chat function, or you can put on your mic and explain it to me. So all the information you need will be in question 4.2.1 at the top of the screen. Oh wait, and there's some additional information which I need to show you as well. Just remember, interest was also charged at 45%, at 45 Rand. Okay, so how would you calculate how much money we need to write off? Okay, any takers? Who thinks they know how to calculate how much money we need to write off? You're welcome to type in your steps as you go as well, if it's going to go quicker. Okay, let's have a look at how we would work it out. Okay, so the first thing we would have is we would have the balance brought down. So how much money did they owe us in the beginning of the month? Now, in the beginning of the month, they owed us 175,000. Then we would add how much did they purchase. So you forget about the 70,000 because it was a deduction and a reversal. So it would have a zero effect. You could show it, but you would just be wasting time and not necessarily get marks. So then we take the sales. Now remember, we only show the amount they are supposed to pay us, which is the sales amount less the 5% discount we've given them. That's why I took the 176,000 and I multiplied it with 95% to give me a value of 167,200. And then we add the interest that was charged to their account of 45 Rand to give us a new balance of what is outstanding of 342 Rand. Okay, so then the next question is, indicate which accounts would be debited and which accounts would be credited. Okay, so this comes from Learning Unit 5. So what account are we going to debit? What account will we credit to write off this bad debt? Okay, so let's start with the easiest account. What are we going to credit? You can type your answer in the chat function for me. So what account will we credit? To answer this question, you need to know what side do we normally find the debtors balance. What do you guys think? Okay, guys, what is the entries that we will have to write off any bad debts? You need to know this for your test because they will actually ask you this. What is the journal entries when we need to write off bad debt? Take a stab at it. Okay, so the first entry, and this is the easiest one, we are going to credit debtors control. Okay, so the value you would credit it at would, okay, so Tatu is asking why are we crediting debtors control. Now remember Tatu, debtors is an asset and we increase an asset on the debit side. Now to decrease an asset, we need to credit it. So that's why we're crediting debtors control. So debtors, if you read debtors, always increase on the debit side. So the first few letters in debtors tells you it's a debit. First few letters in your creditor tells you it's a credit. Okay, that's just a little tip on how to remember whether a debtor is debited or credited. So debtors increase on the debit side and to decrease the amount because we're writing it off. They will no longer be able to pay us. We're going to credit it. Does that make sense to you, Tatu? Okay, so the value we are writing off is the full value. They did not ask for the values, but I'm just going to include it in here so that you can see. So the full value will be written off so that that account, that debtor's account would be a 0. Okay, now on the debit side, we have an account called credit losses or bad debts. Okay, that is when we no longer are able to collect that money from that debtor. We create an expense account, which we call credit losses or bad debts. Okay, so it's exactly what it says. It is. We debit expense accounts. We increase them on that side. Now, what is important to note here is that amount would be exclusive of VAT. So it will be the 100 over 115, giving me a VAT exclusive amount. Because of the fact that we are writing this off and we initially had to raise output VAT, SARS will allow us input VAT to be claimed when we write off the data, and that input VAT amount would be 44,641 Rand. Okay, and that is what the journal would look like. Now, what is very important to note is please use debtors control. Do not use the debtor's name because that is not the account, the general ledger account name. You will not get a mark if you put the debtor's name there. Okay, any questions on this? Do you guys have any questions?